Hello, I'm John Cunningham, and welcome to another episode of the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Today's show features interviews with executives of two public companies. First up is Graphex Group Limited, stock symbol GRFX on the New York Stock Exchange American. Graphex is a global leader in midstream processing of specialized natural graphite used for electric vehicle lithium-ion batteries. We'll learn about their strategy to expand operations in support of energy transition and electrification efforts worldwide when we speak with Graphex President John DeMaio later in the show. Next up is ASP Isotopes, stock symbol ASPI on the NASDAQ. ASP Isotopes is an emerging leader in isotope enrichment technology with wide application potential across a variety of industries. The company is initially focused on the production of molybdenum 100, targeting the $3 billion medical imaging market. We'll learn more about this initiative and other opportunities ASP Isotopes plans to pursue when we speak with the CEO later in the show. Now, before we get to our first interview, our quote of the week. It comes from the book Small Stocks, Big Money. If you want to invest in the microcap space, buy companies, not stocks. If you buy stocks, the daily fluctuations and lack of liquidity will drive you crazy. These quotes come from Byron Roth, CEO of Roth Capital, featured in Chapter 7 of Small Stocks, Big Money. This is a book of exclusive interviews with some of the biggest players in the microcap space. Get a digital copy on Amazon today for just $18. Now let's get started with our first interview today with Graphex Group Limited.
We're here today with John DeMaio on Cinco de Mayo, President of Graphex Group Limited. John, welcome to the show today.
Todd, great to be with you. Thanks for having me.
It's a pleasure. And first off, I'd really like to congratulate you and your team at Graphex on rising to be a top 10 global producer of graphite anodes for EV and other high-capacity batteries.
Yeah, thank you. Appreciate that.
To bring our audience up to speed, why don't you tell us a little bit about the importance of your proprietary technology and how it adds value to the graphite industry, helps the world electrify this big goal. It's a pretty lofty goal of rapid EV electrification and conversion. Tell us a little bit about that in the background, please.
Sure. I think first it starts with an explanation of graphite and the role it plays in the electrification ecosystem. So much of the focus is on batteries, of course. That is the heart and soul of electric vehicles, battery energy storage, et cetera. And batteries contain a significant amount of graphite. It doesn't get the notoriety, if you will, of, say, lithium or manganese, cobalt, et cetera, nickel. But graphite makes up at least 25 to 28% of the volume of a battery. So there could be 15 times more graphite in a battery than lithium, right? And as it stands now, there is a plethora of graphite in existence, if you will, on the planet, but not much of it is being mined. And that's a historic kind of a situation. So what you have now is a mismatch between the supply of graphite, particularly refined graphite, which is what we do, and I'll get to that in a second, and the demand as projected by this electric vehicle proliferation and the push for battery energy storage. So where we excel is in the refining of graphite from its raw material stage to its finished product stage to be used as anode material. And by the virtue of the fact that we've been commercially producing this at scale for over 10 years, we have a high yield production platform. We're experienced at what we do, and that gives us, I'll say, an advantage in the sense that we can produce anode finished material from a variety of sources, and we're ready to plug and play when we talk about domestication efforts in North America and beyond.
Amazing. It's an exciting time for you guys in this whole move and trend. We've seen explosive growth from Tesla and some of the other EV companies coming into their own. But right now, I'm really even more excited about Graphex' decision to establish a facility in Warren, Michigan. Even more that it's an auto parts facility that provided jobs in the Big Three region and now is shut down. How can it help gigafactories reach their goals in the U.S. to have some stable domestic supply of EV batteries?
Yeah, for sure. So, with respect to the Warren, Michigan plant, we announced that in early 22, and that was somewhat ahead of the real focus on domestication efforts. It was before the IRA, for example, before the bipartisan infrastructure law. And that was just a business decision that we made that, again, we have the experience, we have the know-how that was, as I say, born and raised in the Asian ecosystem, which is, let's face it, 15 to 20 years ahead of the rest of the world, with the exception maybe of Tesla. So we felt that we had something to bring to the table to support this electrification movement. Yes, it's a good business decision, but moreover, we want to be a foundational player in this electrification movement. I personally have been part of this energy transition long before it was called that. So it's really satisfying for me to be part of this and to see the momentum moving in that direction. So when we decided to make a plant a flag, so to speak, in North America, we had a blank page, and we considered a lot of different areas. I'm sure you're aware that there's a lot of activity in EVs in the southeast and in the middle of the country, in Kentucky, for example, et cetera. We wanted to look at Michigan because of its historic place in the automotive industry, and we found a location in Warren that, as you mentioned, it was previously an auto support facility. I think it did some kind of undercoating, but it had been dormant for a couple of decades, and some local developers had purchased the property and were starting to renovate it. The fact that it's in Warren, where GM has headquarters, where the city and the folks in Warren have seen an exodus of automotive technology, we felt that we could do well and do good by announcing and building a plant there, bring jobs back, and very importantly, bring technology, which is really a new technology, back into Michigan. So we've had discussions, and we have offers of incentives from the city, state, and local governments. I've had a discussion with the governor, with the mayor of Warren, and it's a very welcoming environment. So we're really excited about bringing that online. And like you said, it will support, it'll make a dent, if you will, in the demand picture. But beyond the plant in Warren, we have plans to expand in much larger capacities, and we're looking at sites and locations for that. So it's a very exciting time, as you mentioned.
No, that's really, I'm sure the community is appreciative of this effort. And speaking to some of the incentives, how can the Inflation Reduction Act affect your business model now and plans to shore up this domestic supply?
Yeah, well, first and foremost, it really is by design motivational to domesticate supply chain, right? Like any legislation, it may be imperfect. Some of the timelines may be overly aggressive, and I think you'll hear that from throughout the industry. But by and large, it's moving in the right direction, and it has a lot of buy-in from both sides of the aisle, from industry, and pretty much by the consumer themselves, which is obviously the driver of this. So those incentives more or less require the supply chain to be domesticated. And again, we feel like we fit right into that in the sense that we are ready, I hate to use the expression again, but to plug and play, right? We have proven technologies, proven procedures. We have a very strong technical bench. So we're ready to bring that expertise to bear. It's not, we're not a startup, and we're not introducing new technology. So we're a relatively low risk kind of a play when you think about how do you do two Herculean tasks: electrify mobility after 100 plus years of internal combustion, at the same time domesticate the supply chain. Well, we feel one of the best ways to do that is to get experienced players that are in that supply chain with experience in it to come and build out that infrastructure.
Why don't you bring it home for our shareholders today, our audience that look at these opportunities and buy stocks from watching the RedChip Money Report? What's your value proposition? Why should they look at Graphex today and consider making a long-term investment?
That's a great question. I partially addressed it, I think, a little bit earlier. You know, when you consider what society is trying to do, again, electrify not only mobility, but really electrify everything, right? Move away from fossil fuels. You know, it can be argued how fast it's going to happen and what the hurdles are, your charging infrastructure, et cetera, range anxiety, all the terms you hear about. The thing is, it's going to happen. And even if we evolve into hydrogen fuel cells, those require batteries as well. Batteries require graphite. There really is no substitute for it, right? There are discussions about, you know, silicon anodes. There are some significant challenges with that, and it's not going to be a near-term solution. We will see, for example, anodes are currently 95 to 99% graphite right now. We may see that trend come down a hair because of introduction of silicon additives, lithium titanium oxide, et cetera. But the percentage of natural graphite will actually go up over time. So again, almost unlimited demand, kind of restricted supply, and not that many players that are experienced in refining it into the anode material as necessary. So we're not, you know, because we've been at this for so long, we have our own IP. We're not beholden to any government, any other company for licensing, et cetera. So we are ready to go. I always say we have ability with agility, and we're more than ready. We've already announced that we're moving into North America. We're going to do the same in Europe. So we're really a ground level play, I believe. Why I'm so excited, why I joined the company, quite frankly. We're bringing picks and shovels to this next gold rush, and graphite is really just now coming on the radar as being kind of the next, you know, lithium, if you will. Right now, it's not commoditized, it's not traded like a commodity. We may see that change somewhat, and whenever you have a supply-demand imbalance, you're going to see, you know, A, more attention, and B, more growth potential.
Now, to get more information on Graphex Group Limited, visit grfxinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-REDCHIP to speak to a specialist if you have any questions. We also have a free weekly newsletter you can subscribe to at redchip.com, featuring emerging growth companies like Graphex Group Limited. In addition to our newsletter, you can also order your copy of Small Stocks, Big Money. This is a book written by RedChip CEO, featuring interviews with some of the biggest players in the microcap space. Order your copy at Amazon.com today for just $18. Now let's move on to our next interview today with ASP Isotopes.
Paul, great to see you again.
Thank you for inviting me.
ASP Isotopes is an advanced materials company dedicated to the development of technology and processes that produce isotopes used in multiple industries. Paul, for viewers new to the story, what is ASP Isotopes?
Thanks, Craig. Yes, so ASP Isotopes is a company that has a unique proprietary technology for enriching isotopes. And isotopes are products that are used, or chemicals that are used in very specialist applications. So, for example, silicon-28 will be used in quantum computing. If I take a bag of sand, a kilo of sand probably costs $1. When we enrich that to silicon-28, that same bag of silicon is $600,000. Take carbon, for example. You take a bag of carbon, bag of charcoal, maybe that costs 50 cents to $1. We enrich that to over 85%, and that's worth $24 million US. And customers have very special, unique applications for these isotopes. And our goal is to become one of the world's leading suppliers of these isotopes for very specialist applications. Currently, we have 2 plants, both in South Africa. The first is complete. It's operating. It'll start producing product in the second half of the year. And the second plant will be mechanically complete over the summer. That should also start finishing products by the end of the year as well.
Thanks for that, Paul. Let's turn now to the state of the isotopes industry. Why are isotopes so relevant right now? When clients and potential clients call you, for example, what are they wanting to talk about?
Yeah, thanks. So, isotopes, we're going through a pretty significant supply-demand kind of disruption in isotopes right now. So there are a number of new uses for isotopes, but there isn't really a Western producer. So, for example, I mentioned earlier silicon-28 for quantum computing. It would appear that no one else can really enrich that to the kind of levels you need in kilogram or large quantities to enable quantum computing. Lots of new isotopes being developed in the healthcare and medical space, as well as new uses for energy as well. So a lot of new emerging demand growth drivers for isotopes. At the same time, there's a real supply disruption. Historically, Russia has been the largest supplier of isotopes to the world. Many consumers of isotopes are questioning, who their suppliers are and whether they should be relying upon countries like Russia to supply such critical needs for both their company and their country. So we're at a pretty interesting point in time. Take carbon-14 as an example. The entire world's supply of carbon-14 used to come from Russia. There's been none available since the start of the war in February of 2022. We started our first plant up back in March, and we've sold the entire capacity to a customer at an extremely attractive price and gross margin for ourselves. And that's a pretty unique situation to be in. We've got 2 plants. I would guess we have about 4.5 times as much interest in the capacity of those plants as we have capacity. So when it's very rare the company you start a new plant up and you're sold out on day one. That's not a problem that we have. We filled our first 2 plants without making a single outbound call. We've had all the calls have been into ourselves from companies that are desperate for a new producer of isotopes.
Paul, a lot of investors ask us, why South Africa? What is the relationship between ASP Isotopes and South Africa? How are you able to find your assets in that country? And how is it that South Africans can enrich isotopes and other countries cannot?
Yeah, so that's an interesting question. I get asked that quite a lot by investors. And a lot of investors probably don't remember the apartheid years back in the 70s, 80s, and 90s. I grew up in London, and I remember the Free Nelson Mandela campaigns and chants in the streets. And during those apartheid years, South Africa wasn't allowed to import a lot of the materials and technologies that the rest of the world enjoyed. So they were forced to do a lot of the development and research work themselves. So during the 1970s and 80s and I guess early 90s, South Africa built up a really very enviable nuclear technology. They built 2 nuclear reactors, 6 nuclear weapons, 2 enrichment facilities to enrich uranium themselves, and they became a pretty formidable power in the nuclear world. In 1994, all that changed, and South Africa shut down its enrichment programs, its nuclear programs, and now they just have a nuclear power station. But a lot of those scientists were left looking for work when that program shut down. And so, our scientists, both have got PhDs in physics and chemistry, went on to develop processes to enrich isotopes for stable isotopes for friendly purposes, such as medical applications. They struggled along for 20 years without much funding, and then we found them about 20 years later. And I've spent my career really investing in healthcare and chemistry, and I recognized straight away this technology could be really useful if it could be properly funded and put into a company. So we incorporated the company in Delaware, and then we pushed their company, which basically ran out of money, into a business rescue process, which is similar to bankruptcy in the US. And we bought the assets in the business rescue process. And I also recognized that in order to buy these assets, you'd have to have permits from the Non-Proliferation Council, the International Atomic Energy Agency. So we got those permits ahead of any bankruptcy or business rescue auction. So it was a fairly easy contested auction, and that we had the correct permits. So we were lucky that we spent 8 months due diligencing the assets before buying them, and we're very lucky to get this technology. And actually, when you look around the world, a lot of the nuclear companies, those companies developing SMRs, small modular reactors, even in America, a lot of their nuclear physicists come from South Africa. Actually, they've emigrated to the US. South Africa developed the pebble bed reactor, which has gone on to become the small modular reactor. So a lot of the world's newest technologies actually came from South Africa. It's quite bizarre that a country that can't even power its own grid right now used to be a leader in nuclear technology.
Thank you for that explanation, Paul. Let's turn now to finances. Investors, especially those in microcaps, are obsessed with the balance sheet of microcap companies. Let's talk about ASP Isotopes' cash position.
Yeah, so we finished the first quarter with about $5 million of cash on our balance sheet. We've got no debt, so we're talking to potential debt funders as well to extend our cash runway. As a company, we don't spend very much money. I'm a very frugal CEO. We spend about $3.5 to $4 million a year to keep the lights on in the companies. Our total cost for keeping this company operating is sort of $3.5 to $4 million a year, that kind of number. So, I've learned over the years the fastest way to become cash flow positive is not to spend too much cash. So we've purposefully kept the cash burn very low. We haven't had a large investor relations department or lots of salespeople or what have you. There's really just 3 employees outside of South Africa. So we benefit from not spending too much cash. In terms of contracts and speed to get to cash flow break even, we've signed 2 contracts so far, which should start up in the next sort of several months or so. The first is a take or pay contract with a Canadian customer. That's for the entire carbon-14 supply. That's got a guaranteed minimum of $2.5 million a year. We expect to produce more like $3 to $4 million a year from that contract, and that's backed by a bank letter of guarantee. The second contract was with an Asian healthcare system. It's with the Beijing Institute of Metallurgy and Chemical Engineers. That's for up to $27 million a year of molybdenum-100. That should start at some point during the next 12 months as well. And that's not a take or pay type guarantee, but the customers is invested very heavily in using molybdenum-100 in their healthcare system. And then we're looking to sign a couple more contracts in the next sort of 3 or 4 months or so for that second plant. And once we've got a clear line of sight into what 2024 looks like, we'd like to provide some revenue guidance to the street.
So we know you, the CEO, have had a sterling career and could have dedicated yourself to any number of projects. Why have you and your colleagues chosen ASP Isotopes?
So for myself, I spent most of my career in finance, making money for other people, and taking some of it myself. And there comes a point in your life where you actually want to do something else in your career. You want to kind of create something that's going to help the world or benefit the world. And this is an industry or science I really understand very well. So that was why I kind of chose to get involved in this industry. In terms of other people on our board and management team, Dr. Hendrik Strijdom has a PhD in nuclear physics, and he was part of the South African nuclear program. He's our chief technology officer. We have Dr. Einar Ronanda, who's actually got a PhD in physics and a PhD in chemistry. He also came to the nuclear program in South Africa, and he's our scientific advisor to the board. We've got a very lean management team, so there's only really 3 of us outside of South Africa. In terms of our board of directors, most of them were the founding investors who I've met during my last sort of 20 years on Wall Street. So Duncan Moore used to be the head of Morgan Stanley's healthcare research team. He was a founding investor and joined the board. Sergei Vasetnov was essentially head of M&A and business development at LyondellBasell, also a 15-year Wall Street veteran. He was a founding investor, and he's actually vice chairman of the board. So we've got a diverse group of individuals on the board and in management team.
To conclude, Paul, what is the essential value proposition? Why should investors pay attention to ASP Isotopes right now?
The isotopes industry is at a unique point of time in history. There's a lot of new demand for isotopes. There's a dwindling supply of isotopes. We hope to fill that gap. We have 2 plants that are either complete or close to being complete that should start producing commercial product later on this year. And assuming we're successful in that, we hope to generate substantial returns for shareholders.
Now, to get more information on ASP Isotopes, visit aspiinfo.com. You'll see research reports, fact sheets, presentations, and the latest videos. It's all free. You can even subscribe to email alerts to stay on top of the latest news. You can also call 1-800-RedChip to speak to a specialist if you have any questions. Now let's recap the companies you met today. First, you met Graphex Group Limited, stock symbol GRFX on the New York Stock Exchange American. Graphite is a critical component in the batteries that are powering the rapidly growing EV and renewable energy markets, comprising up to 99% of the anode material and up to 25% of total battery mass. As one of the world's largest and most experienced graphite technology companies, Graphex is uniquely positioned as a foundational contributor to the future of energy. To learn more how Graphex is capitalizing on this position, visit grfxinfo.com. Then you met ASP Isotopes, stock symbol ASPI on the NASDAQ. ASP Isotopes is currently constructing a production plant in South Africa to address significant interest from potential customers. With volumes already exceeding 100% of the capacity of the first plant. And by 2028, ASP Isotopes expects to be a leading supplier of non-nuclear enriched isotopes, generating over $150 million in EBITDA per annum. Learn more by visiting aspiinfo.com. Again, if you have any questions about any of the companies featured on today's show, call us at 1-800-REDCHIP or email us at info@redchip.com. In closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile asset class. Some of the companies featured on this show are RedChip client companies, and we may own stock in these companies. So please always read our disclosures at redchip.com. Thanks for being with us today. We'll see you next week with some new exciting emerging growth company.